the market has shifted in the last month or so.
Yeah, we're past mid-year. Isn't it
past
crazy?
mid-year. I can't even believe that. And so, you're you're amazing professional. One of the, I guess you're number one in the universe. I mean, what is your what is your category? I mean, you're number one in this country, right?
Well, we're really blessed to be for purchase units last year, which was a really big year, to be number 3 in the nation. So my team, my personal team, and I. So
number 3. What happened? Number 2.
That's 2? Okay. Top 5. I think that's we worked really hard last year, and I think that's a huge win for female. To be a female in this industry, which is heavily, with the gentleman leading the force there. I think that's a big win for us. But you're right. I mean, this is, mid-year, the world is kind of shifting. For us lenders, cash was so king for so long. And I was like, why don't you like me?
But did what you did with this huge paradigm shift where, I could count on maybe one hand until, a few years ago, not in one hand, but in my experience, maybe 1 out of 100 was a cash deal.
Well, I don't think anybody knew how to spell cash for years until just recently, in my opinion. Yeah. I mean, when we would take applications, it was we kind of skated around the asset section because you didn't want to make anybody feel uncomfortable. Right. Is your checking account money in, money out for bills? Yeah. To ask how much money is in your checking account was just an awkward question to ask. But, and it's a blessing for so many people to have cash to be able to do what they've done, right? Mm-hmm. And I've been reaching out to all the folks and say, hey, put me in, coach. I'm ready. I'm ready to get back in and show them what we've got. And financing is still very strong. Rates, this, that, we talk about it. That doesn't really matter. It's everybody needs a home, right? There's still a huge benefit in being a homeowner. And I am just so blessed to be in an industry that I truly love. I create solutions to, problems each and every day. And there's a new one that brings me goosebumps. I just truly love what I get to do. And then I love to educate the real estate agent. Jason and I, we talk, there's so many newbies that get in the industry and they already want to be over here, right? They don't want to go, they don't want to walk. They just want to jump already, over there. And so, bringing knowledge to real estate agents and our community with all the things, I mean, to see their eyes open every time I teach a class is kind of a cool thing. And in our industry, we learn something new each and every day, right? The guidelines change on a regular basis.
It's a moving target.
Yeah. Who we couldn't help yesterday, we can help today, and it's just a blessing to be in our industry, I think.
So, what are some of the most recent changes that you have encouraged? I know that every Monday morning when we have our huddle call and you come on and share some nuggets, there's always little changes that you're making, that your company is making, that you're making, that you're embracing different ideas. I mean, one of them was, I know that you talked about buying a rate down instead of being stuck with whatever the prevailing rate is, because some people, over the years that we worked together, I've never heard you fixated about rate. I never knew what the interest rate was because I just knew that I could send things to you and get the job done regardless of rate. Of course, it wasn't like it has been recently, but still, you're fixated on rate. You're teaching people how to get around, get qualified for what they're qualified for. So let's talk about that. Yeah,
I think how I look at it is, as a real estate agent, when you talk to somebody and they're excited about purchasing a home, you want to help them purchase that home.
Oh, yes.
But you don't know the story behind, right? The cover right there. So, what I teach real estate agents is everybody's got a story. My job is to be able to complement that story with the right mortgage program and making sure that I have enough options. So it is not that you have to stress that you're calling Joe and Sue and Steve and Michael and then Carey Ann, right? Meaning you have one place to know that all the knowledge, all the mortgage offerings are there to really get you feeling confident. And then we talk about selling with confidence, right? that's what you want to do as a professional. You want to be able to truly sell with confidence. There's so many, and I'm grateful for every opportunity that crosses my desk because my kid's still 9 and I love all loans. But there's so many that cross my desk. And
What's your kid being 9 have to do that? Do you still have to feed her? Is that true?
She's got to be fed, yes. Okay. And she wants clothes, and we're going to move into all
clothing. She's over there going approved. All the
Disneyland
things, approved.
Yeah, all the things that eventually come with preteen and then a teen and all the things, right? And she,
been there.
I kind of giggled the other day. She saw the bank account, the mail came in, right? And she saw her name on it. She's like, "What is this?" And I was like, "That is your college fund. Mama's got to save for later on how it all works." But just kind of thinking about, if I was a real estate agent and you thought what someone told you to be true, right? And then it started buckling. The system started buckling. That's a lot of pressure on you, which means what do? You stop talking and thinking about the next opportunity, right? You're so focused and laser focused on this opportunity just to fix it, right? And so thinking about being in a business, working with those true professionals that they should be giving you confident, advice and or solutions to every problem, and I hate to say that mortgages are problems, but there is a puzzle. I mean, and you've got to put all the puzzle pieces together. Yes, there's income, there's assets, and there's credit, but everybody's income, assets, and credit are all different. Everybody's, scenario is a little bit different. Over the last 2 years, if you think about it, we all look at the last 2 years of someone's life.
Right.
The last 2 years have been a little crazy for some, right? Up, down, left, right, got back because of the COVID situation. And so depending on the scenario, and let's say they're making lots of money now, they're ready, they're excited. They tell you, I am ready. I've got so much money. Life is good. My family is excited to purchase real estate. And so you're like, yes, let's do it. And then find out that they didn't do anything the previous year. Yeah. Right. And so life it's very hard to get the financing piece, right? So just kind of thinking through that. But when you reference about the tools with interest rates, right? Changing the narrative, getting away from rate, talking more about comfort and affordability, right? And we talked with TJ a lot about that over the last couple of weeks as well. And so I think it's really important to back into the client's comfort, right? I think you and I would position people in a really bad place, and we set them up to fail if we just get them approved for a loan and you just find them a house and we don't talk about their comfort level, because the computer systems don't think about all of the other things. Gasoline, right?
Baby formula.
Yeah, we've got a new family. The diapers. I remember what formula cost. If you can't breastfeed, that's costly, right? And all the things. And so you want to think about that. So we really try to approach the conversation with the client about what are you comfortable paying every month? And let's just say that they do afford and they can qualify for blank interest rate. Well, it may make sense for me to talk about a buy down. It may make sense for me to talk about what we call with my team a step program, where we step them into what today's interest rate is, right? And that might be 1% or 2% less, depending upon where we think it's best for them. Now, we had one client who was comfortable at $2,600. They were working with the lender, new construction, and that lender did not lock them in for a reason, right? And so rates just shifted. And I will tell you about the market. Friday afternoon, I shut it down and I wake up Monday and literally the interest rates moved 1.5 points. I mean, I cried. I literally was like, what? And I cried for all of the clients who were thinking about doing something, right? And what's great about what we've created at my mortgage team is all of these tools that protect you, whether you look at this or look at that, meaning you can lock in your interest rate today. And if the market shifts, we can float you down to the lower price. You're protected across the board if you're in the market to do something within a 90-day period, and if you
That's a huge deal.
It is. And if you are that client who has the newborn, well, your budget will shift 12 months from now, 2 months from now, 2 years from now. And so why don't we position you in a way where we can save you a little extra money for all those necessary items that you need to maybe purchase? interest along the way, and then move you into a different position, 12 months and or 24 months. Now there's a cost associated with that, and we'll show you this option or that option. And, we have some real estate agents that are contributing, some builders that are contributing, you as the buyer can contribute and the lender as well. So there's ways to kind of come together.
So you're saying the agent can contribute as well?
Yeah. And so, really thinking about being
through
creative.
the seller, I guess?
You can use your commission towards contributing towards, cost and helping to buy interest rates down. Mm-hmm.
Okay. So this is interesting. Can we delve in that just a second?
Yeah.
Because this is something I'm not sure I'm clear on. Is that governed then? I mean, it has to come through the seller, doesn't it, or not?
No,
it can just go directly.
Yeah,
to the
you
agent?
may talk through with your own broker, and you guys as well, what makes the most sense, and probably your CPA on how it all works.
We don't care as long as it's legal and ethical and so forth. But I just want to make sure that are they going to be capped by what the seller can only contribute up to 3% or 6%.
Yeah, so depending upon the type of loan that you do, the seller concessions, which I love that we're talking about seller concessions because those weren't in a conversation for a really long time, right?
Yeah.
So that's kind of a cool thing. So on the VA loans, with which we love our vets, that's 4% the seller can pay. And what's super cool about a VA loan is the seller can also pay 4% of the vet's debts. So not only closing costs, but if you wanted to roll in and keep the price the same, you can roll in the remaining balance of their car loan and or credit card A, B, and C up to 4%. So you can position the vet in a really good
So
organization
does the house
way.
have to appraise for that additional 4% or no?
It has to be in the purchase price,
Yeah.
right? Mm-hmm.
Okay.
Everything has to appraise. But with the market shifting, maybe people want to maintain purchase prices, right? They want to keep the purchase price the same, but they're willing to give a little extra love. That might be something you can do on the VA
Like
loan.
a normal market.
Yeah. Hey, welcome
back
back
in the
to
day, a
normalcy,
normal-
right? On a conventional loan, depending upon the loan to value, we usually say 3%. That's a good number to work off of. And all of these are the percentage plus title. So we never really were talking about that for a period of time. But in your contract, there's a section where who's paying title. If you put that with the seller, seller can pay title plus the percentage that we were talking about today. Now, on an investment loan, seller can only contribute 2%. So that's not a Carey Ann thing. That's across the board. So the sellers can only on an investment property only pay 2%. And then FHA again is between 3 and 6% depending, and that's towards cost, right? And so let's say that they're contributing money
3 and
towards
6%. That's a big difference.
Well, it's depending upon the loan to value, it shifts. Now, closing costs should never be that much money, right? But again, sometimes adding on interest rates, buying down points and things, sometimes that can increase a little bit compared to your normal, 3% closing cost to include your escrows. But you, as the real estate agent, can contribute a little money towards this or that, right? You can do a broker credit. Now, again, from a tax standpoint, you probably want to visit with a CPA. If the money goes to RG and then RG pays it back and it credits this and that. I don't know how it all works, but sometimes they just put that towards less in the commission and the seller paid the closing costs.
If it's
right?
a
You can do
broker
it that way.
credit and the lender is okay with it, then the broker's not receiving it, nor is the agent. So it's not about
There you go.
concerned about that.
Okay, even
as long
better.
as the lender's happy about it, I think that's the big deal.
Yeah, and we have many folks that are willing to be creative on different options. And again, everybody's story is different. One person needs closing costs. One person wants a lower interest rate, right? One person needs that or this to just feel comfortable with what they've got.